Silver is going absolutely parabolic, and the debasement trade is absolutely running like crazy. And the Fed still wants to cut interest rates. It makes you think, what the hell is going on right now? And is the actual economy as great as everybody is lining out? We are seeing something that we've never seen in the silver market. And in fact, when you see parabolic charts from precious metals like this, it should raise some flags because this is just so uncommon. I mean, literally has never happened in history. And it's now borrowing has spiked above 100% annualized, hitting that all-time high. I mean, it surpasses the surge that we saw in 1980s with the silver short squeeze. We actually had silver hit an all-time high as well today. And at the same time, the 1 month lease rate of silver jumped to a 35% annualized rate. This is the highest in the last 5 years. So it's absolutely crazy to me that we're looking at all of this and saying, you know what? I think that everything's okay and that we need to cut interest rates. Not so fast, my friend. I think we need to take a step back and really analyze what we got going on here. But this squeeze has been driven by investor purchases, a sharply reduced supply of bars available for trade, and a sudden spike in demand from India. So meanwhile, the benchmark London silver prices have surged to $3 premium over New York futures market, and that 15 million to 30 million ounces is humming along. So silver searching to all-time high above that 52.5 per ounce is insane. And on top of it, we're seeing the gold ETF surging its largest volume on record from this past Thursday. So the only other time it reached that level was in 2013. So as I lined out, it's interesting because we have been getting a lot of talk about this debasement trade, but this is the new wave, it seems. They're looking at gold and Bitcoin during their volatile October times as ways to hedge against this inflation. And gold is surging at record highs, and Bitcoin is pretty close behind it, although it's down a little bit here in the past couple of days. But this debasement trade accelerated with investments turning to those hard assets, such as Bitcoin, gold, and precious metals. So you got to ask yourself with this, why are investors turning to more hard assets, especially with what we see going on? I mean, it's just a matter of time, right? We have about 16 days or so until we decide whether or not we're going to cut interest rates. And we have a 98.3% chance to cut interest rates here, 25 basis points at the very least. But this gold rally is insane. It's well above the peak. And the Thursday volume of gold was higher than the Mag 7. So what does that mean? It means investors are flocking to this hard asset well more than the quote unquote safe assets, as in the S&P 500 or the Mag 7. And the funny thing about all of this is that gold has actually been outperforming the S&P 500 through this year. And if you take a step back and look, the S&P 500 is actually on a historic run. Some might call it generational. Look, it's down a little bit today, but if you zoom out in these past 6 months and you look at it year to date, from these April lows, we've had literally a 34% increase since this bottom right here. It's the best 6-ish month run in S&P 500 history, literal history. So the market is running rampant, but we've got absolute insanity in it. Because if you take a step back and look at how everything is moving, well, the jobs market is hurting, and I've done several videos on that. So please make sure you guys are hitting that subscribe button for me. I'm nearly at 500 or 400, excuse me. Help me get there and hit that like button for me. But if you take a step back and look, well, Over 72 hours, gold rallied on every headline, even as the S&P 500 erased 2.5 trillion. So what does this mean from the gold and these silver markets absolutely taking off? It means where gold has reached a point where the technicals seem to be irrelevant. Gold's monthly RSI hit that 91.5, and it's the most overbought, quote unquote, since 1980. So we're seeing gold and these precious metals, silver and others, absolutely taking off. And yet, Donald Trump is banging on the Fed's door. We need to cut interest rates and put in more liquidity. But this liquidity isn't the end all be all. It's not the perfect one size, oh, this is going to be the solution. No, no, no. This is the first time we're actually cutting interest rates when the inflation, CPI and PPI are close to, or PCE, excuse me, are close to that 3% mark. So this will be the highest that we will cut interest rates into, and it's going to send markets rocketing up. But the funny thing is even with all of this, the market has been pricing in 3 interest rates cut this year. We got one, and now we're looking for the last 2. And it seems like an inevitability at this point, but gold is showing those signs that we should be worried about what is coming next, especially when you look at silver as well. So we've seen what's gone on in other markets as well. If you back up and look at another video I did on the UK, when they cut interest rates, they are now seeing massive amounts of inflation all coming back. So there's evidence to show that if we make this move and cut interest rates, which there's a 98.3% chance as of today, well, that's not going to be good for the long run in inflation, right? So if you continue to take a look at these monthly RSI, this is not even something that we saw during 01, 08, or 2020. And so the US dollar has been declining and is having literally the worst year since 1973. And for those of you in the chat, you guys know that WTF happened in 1971. Well, we went off the gold standard. Many would argue we went off the gold standard even before that. But this fiat money system that we have is just having the dollar on the biggest bear market of all time and gold on an essentially major rally. Even the US dollar rebounded 2% since October 4th, and gold prices are up 5% during that same period. So gold is so strong that it's defying its historical relationship with USD. That's how much is going on here in this gold market. And you might ask yourself, okay, well, if this gold market is taking off and the dollar is declining, well, why is that? Why are we starting to see this really rebound like it is? Well, if you're looking at this, you're looking at central banks loading up on gold. Those world central banks bought another 15 tons of gold in August. So they keep on having that net purchase. And the funny thing is if you actually look at the net purchases by central banks, China has been loading up for decades. So if China loads up, the US doesn't. And then when China pauses, well, the US is loading up. So it's always an interesting little battle here where we're seeing, the Chinese load up and the United States pause and then flip-flopping back and forth. But these central banks, they know what they're doing. They see the debasement trade. They're not just some dumb guys waiting for Wall Street to take advantage. No, no, no. China's gold holding keeps going up 1% to 6.5% of its reserves since 2015. And the US Treasury holdings, on the other hand, are halving. So like I said, these guys they're flip-flopping back and forth on these overall holdings. So it makes you think, why are they doing that? Well, the United States needs the money, it seems, and well, China, they want to do whatever the opposite is of the United States. So we're going to keep diving into this. Make sure you guys are smoking that like Cheech and Chong and hitting the subscribe button. But when you look at what's even more crazy, right? The global official reserve assets in gold have risen towards 25%. The USD has gone down from 55% to 40%. It's barely starting to make a dent in the chart. Gold reserves can go much higher. Nearly 4 times higher is where it can go. because that would be the peak in the 1970s when we had all of this. But it looks like we are still very, very early in this debasement trade, and we're seeing silver hit crazy highs. And so many compare silver to, some of these other crypto assets, and they look at Bitcoin as gold. So when gold rockets, silver will do even better. And so we're seeing the silver short squeeze hit records right now and hitting its highest in decades. In London intensifies with a fresh surge, adding urgency to a worldwide hunt for the bullion that could alleviate the mismatch between the demand and the supply. Because something that is scarce, hint, hint, nudge, nudge, is now suffering a short squeeze. And if you keep on looking, right, this debasement trade, well, it's the talk of the town. It's all about gold, silver, Bitcoin, because they're buying it because, hey, we need to do this and buy this while fiat erodes. And as TF is saying, Cantor Fitzgerald will be releasing a Bitcoin gold ETF. So that should tell us a little something here, huh? Because Cantor, well, for those of you who don't know, Howard Lubnick, he's going to be working as the sovereign wealth fund manager for the United States. And, well, he used to work and manage a portfolio for Cantor Fitzgerald. So he's done very well for himself. And, well, if you look at what they got going on here, it makes all the more sense. And recently, with the dollar and everything surging up, we've actually got a big run in the dollar over the past 5-ish days. I mean, we got over the last month up nearly 2%, up nearly 0.65% in the fast day, and nearly up 5% in this day, or 0.5%, excuse me, in this day, nearly at 99. We're getting inching closer to the strength of the dollar actually looking good. So with the strength of the dollar actually looking decent here, you got to wonder, all right, well, the dollar's looking good, but the debasement trade is not. So what does that mean? Does that mean that the dollar, the Dixie index, is showing strength across other fiat currencies? So we shouldn't be worrying too much about the inflationary concerns? Or are investors just flocking towards the dollar at this point because every other fiat currency is suffering a lot more than the dollar? So we'll be keeping a very close eye on that, especially as this debasement trade intensifies and spot silver has been climbing because Zero Hedge has pointed out here, hey, these are all-time highs, something that is starting to get very, very real here because, the gold revaluation price would be 1.075 trillion. So then this is interesting here. Trump will probably wait until it hits at least 2 trillion, by which point stablecoins should generate about 1 trillion in annual bill demand. So what Zero Hedge is essentially lining out here is that this is all a part of the plan. Weaken the dollar because the United States has so much in gold reserves, where once we revalue those gold reserves, well, then we will have $2 trillion. We can help use stable coins with that to then eliminate that 37, probably 30, it'll probably be $40 trillion worth of debt at that point. But this will all help crack into the United States debt. So make sure you guys are smoking that like, hitting that subscribe button, telling a friend to tell a friend. I'll be following this along. I appreciate you coming on in, as I've been on a little bit of a hiatus, but I'm back and I'm going to be trying to bring you guys as much content as possible.